Hello and welcome. Today is Saturday, June 28th, 2025. And since it's the end of the quarter, wanted to follow up on what we are calling the Don't Trade Fade series, where we take a bunch of portfolios that we develop in the beginning of the year and compare them to how the market's doing. I don't know if you remember, last year the market beat every one of these portfolios, and it was actually surprising by how much it beat some of the professionals and all that. This year so far, I would say not that exciting, but I wanted to follow up just to keep it consistent so we can consistently do this and see how things are doing. What I would say is, like last year, for example, the market breadth was very narrow, so therefore it was very difficult to beat the market, and that proved out in this. This year, the breadth seems a lot better overall in the market, and so these guys are doing a lot better. This is the Barron's Roundtable. Their picks for the year is outperforming the market by about 3% a year. So these guys are earning their fees this year, it seems, although last year they were the worst by a long shot. Their picks were flat last year while the market was up a lot. You can go back and see that video. But this year, they're doing better. This was the CNBC picks at the beginning of the year. They are beating the market by a little bit less than Barron's, but nevertheless beating the market. So good for them. Our main man, Dan Nathan, who we like to separate because he's so special, is also beating the market by a little bit. He wasn't for a while. He's been back and forth. He didn't do well during the move down, clearly in April. Oh no, I'm sorry, that was this. But he's doing okay. Old Dan the man. So good for Dan. This is our alphabetical, random as can be. We just picked the first 38 stocks alphabetically in the S&P 500, and that is underperforming. That was one of the better performers last year. This year, it's the worst performer. So take that for what it is. And this was our Chat GPT. Give us 38 stocks, Chat GPT. Let's see how you do. And this one did the best last year. Did not beat the index, but did the best compared to the rest of the portfolios. And it is doing the best this year. It's actually beating the S&P by 6%. So, hey man, AI, you go. Not only replacing all human beings in the world and the work they have to do, it also does a better job of stock picking. It did a better job last year than all of these professionals or all these portfolios. And it's doing a better job this year of all these portfolios and actually beating the index by quite a bit. 6% is quite a bit. So there you have it. Like I say, nothing huge here, but wanted to follow up, wanted to keep it consistent so that we could keep tracking this to see where there are interesting things and what it may be telling us about the market. Again, what this tells me about the market, the fact that all these portfolios, for the most part, are doing very well relative to the index, means the breadth is good, because that's when stock picking works. And we saw it, like I say, last year, the breadth was bad. These things all were horrible. And this year they're all doing well. So breadth is much, much better. Does breadth mean the market's healthier? Does it mean that? That's up to you to decide. I'm not a huge believer in breadth over time, but that is what this is saying. So anyway, there's the follow-up. I hope you enjoy it. And we'll follow up again at the end of the quarter. We do this every quarter. Okay? Thanks, and have a good one.